So we look forward to meeting all of them. We also have Joseph Tsou, Managing Director of BlockEx, which is a digital asset exchange platform, and Steve Jernigan, who's co-founder of Ramps and has spent over 15 years in commercial and real estate finance and also in capital markets. And I think it's safe to say we have at least one ICO skeptic on the panel based on our pre-panel discussions, so I'm hoping we're not going to come to blows. But we'll try to be nice to each other whilst possibly disagreeing about the pros and cons of ICOs. So I don't want to sort of do too many presentations on this panel. I think it's more interesting to have a debate. I guess one thing I wanted to kick off with asking all of the panelists is, I guess first of all, ICOs good or ICOs bad, or maybe ICOs good and bad. But also, what is the key difference between trading in traditional assets versus trading in cryptocurrencies and tokens? So maybe we can start with Anastasia. And also, she mentioned to me earlier that her background in private equity has given her an interesting perspective on how to evaluate these ICOs. So maybe you can talk a little bit about that as well. ICOs good or bad?
As a tool, good, absolutely. But as any tool, you can use a shovel to hit somebody over the head, or you can actually do something useful with it. We're going through a very interesting phase where a lot of the, let's say, plays ICOs that would never, ever have a chance of raising a penny in or a cent in a conventional capital markets or private markets hitting off the ground. I screen ICOs regularly, and for me initially it was just astounding what people would give money to. The biggest lesson for me was to forget everything I've learned before and to find new frameworks to appraise those opportunities and to understand what makes people part with their money, how do companies, teams rather, what mistakes that they make, how does the community view certain actions. So it's a fascinating journey, very, very interesting. But yes, to me ICO is an emerging, exceptionally powerful tool that absolutely has a very strong disruptive potential.
Yeah, with, I guess, certain caveats. And the next two speakers are both involved in a way in trying to sort of create this new framework of how you evaluate ICOs. So maybe both of you can talk a little bit about that, from Jonathan and Joseph.
Sure, I think that's a good segue. And perhaps at risk of being a bit self-serving here, we just did an ICO. And so I think ICOs are good. But there are some aspects of it that obviously could benefit from further regulation, for one, further structure around KYC processing, around holding periods, around information disclosure, which I think isn't really there yet. And there's a lot of things that could be borrowed from the existing conventional capital markets that could be applied to crypto markets.
Yeah, so it's still kind of an immature marketplace in many ways. And even if you look at Bitcoin, we were talking earlier about, a few years back, you would have been amazed to see a Bitcoin hedge fund or a Bitcoin futures exchange, but now these things are starting to become more accepted. So, other things are going to happen in the ICO marketplace, which we haven't yet seen, I think. Joseph?
Yeah, so I agree totally with the two speakers. Basically, I think ICO as a tool itself has the ability to change how people raise funds. And I also agree that right now it's slightly unregulated, and there's a lot of scammy ICOs out there. As I'm pretty sure Stephen will tell you, that a lot of these ICO are bad, and they'll never find...
They're all scams.
Or scams, yes. They'll never actually see fruition. A lot of these projects will never actually deliver what they promised they would. So I think what we're trying to do is, before the regulators come in and set the regulations, as a community, we should self-regulate what our ICO is about and maybe protect the investors as well as the company issuing ICOs from a lot of these scams. Because, for example, a company raising, say, upwards of 30 millions or 100 millions money, if they get all that in one go, they might not be able to use it correctly and wisely to create their products. So I think, self-regulations of the current space is very important. And if used correctly, I think ICO would be able to replace the traditional IPO in very near future.
So I'm guessing Steve's going to disagree, but I don't want to take the words out of his mouth.
I think it's fortunate that, the way a lot of these ICOs work, that the companies actually are never going to get all of the money because the distribution process is effectively a multi-level marketing scheme. Mm-hmm. So you issue a huge discount to a whale. The whale has a network. They issue it. That network has a network. And so at the end of the day, the net proceeds to the company are going to be actually a vanishingly small amount compared to what the stated raise is. So that's good because it keeps money out of people who aren't smart enough to actually go out and raise real dollars. Keeps it out of their hands. It keeps them from wasting it. But I think that the idea that an ICO is somehow new or it's exceptional is really a problem. You have a lot of people saying that we don't have regulations, we don't have guidance from regulators. You do. There are securities regulations.
So would you just put it under existing securities regulation and under sort of crowd? What the SEC have been saying up till now is sort of shoehorning ICOs into kind of existing crowdfunding and securities regulation. Is that where you would place the whole thing, or do you
Absolutely. And I think that you could evolve those regulations if you have ICO issuers and the people that are profiting off of this engage with regulators in a meaningful way, other than sticking your hands in yours and saying, "Oh, we're not securities," like you are, for the most part. This utility token stuff, total nonsense. This idea that it's a donation and you should not expect anything, get real. I honestly think that everybody is doing themselves a real disservice by pretending that it's something different, special, exceptional.
I suppose the different part is kind of the democratization of investing, if you like, and the access to capital for startups. That one of the reasons this is so attractive. Yes, for some people it's about making a quick buck, but for other people it's about getting access to funds that they might not otherwise have got through traditional VC rounds. Not everyone has kind of access to those networks or the confidence to go out and find the right people to pitch to and to even make the pitch. So, is there a sort of upside in the sense that there are some great innovative startups that have got funding that would otherwise not get it through the more traditional means?
I'd love to see an example.
I think there's probably a few examples out there, but I'll let the other panel answer first. Do you think that there are people out there who would not otherwise raise funds that are now accessing funds in this way? It's sort of disrupting the entire VC model. So what do you think is the sort of state of play in terms of traditional investment now as a result of the growth of ICOs?
Yeah, I can take this one. So we, as a company, have been operating for almost 3 years now, and we've raised money in the conventional sense. We've raised money in return for equity in our company from smaller institutional investors, from angel investors, and we've been able to demonstrate that we do have a compelling vision, and we have an existing product, existing platform, and revenues from our clients. But to get to that next level of growth, a Series A, smaller Series A, we needed to be able to convince them of the scalability of our platform. And for us, it was a little bit of a chicken or the egg problem because we have great traction on the revenue side, but in order to demonstrate enough viability for a Series A, we didn't have that scale. Okay, and when we looked at the ICO, it was one way to, in a non-dilutive way, be able to get the capital that we needed to scale first and demonstrate that this does work at a larger scale. And it's not just the 3-4 dozen or so financial institutions that are using our product. It could be several hundred, several thousand financial institutions using our product. So we definitely took advantage of that and benefited from the alternative fundraising channel that ICO represents.
The other interesting phenomenon is someone said that VCs are actually pushing companies into doing ICOs, which is maybe not what you would expect. You would think that they might feel threatened by the ICO phenomenon, but actually it's sort of a push-pull mechanism between the two.
I think, and then you go, sorry, I just had a quick thought I didn't want to get out there. So I think the VCs that are already in these companies are, of course, pushing their startups to do an ICO because it's non-dilutive. Nothing hits their cap table, and they love that. But for VCs that are looking to deploy their capital, they hate it. They're being squeezed out. They're the ones that used to hold all the cards and they had all the leverage at the table. Now they're having to chase after deals themselves. The deals don't come to them.
There's also this liquidity issue.
Sorry. Go on.
This issue of liquidity. So
Yeah.
for VCs that are already in the game, they don't need to sit and wait until year 4, 5, 6.
There's also like a third category of VC, which is the one that will put maybe a late stage seed round in, and then immediately take profits when you do an ICO. So for them, I can understand why that's attractive, but I don't really understand why it's helpful.
Yeah. So would you like to see ICOs banned, or do you think they should just be put under the framework of the existing regulations?
I don't think you should ban anything, but I mean, if you're going to go raise money and you're going to be in the business of raising money, because most of these projects are not in the business of doing business, they're in the business of raising money, then you should be bound by regulations that have been set forth. And again, regulations evolve all the time. Regulators are slow. There's a reason for it, because a regulator would rather wait, see how things are going to happen, versus put poor regulation into action
Yeah, 'cause
without
I mean, that's the
careful
other
consideration.
scenario, isn't it? So you have a sort of dangerous dogs legislation, so some really bad fraud or some really bad actor enters the space and there's a disaster, lots of people lose money, and then the regulators come in hard and they say, we're going to really tighten up on you, and that's most likely to happen at some stage.
Yeah, and I mean, you're going to have people get pinched on money laundering, terrorism financing. I mean, those are real risks. When you take money from people that you don't know, you put yourself at risk for facilitating some sort of underlying crime, which is actually much worse than securities fraud.
So should the companies themselves spend more time on kind of lobbying and public affairs in order to educate regulators about what to do? Because, I mean, certainly in the early days of Bitcoin, there was quite a bit of kind of public education work done to prevent certain regulations which would have maybe stifled the innovation involved in cryptocurrencies, and that was partly about teaching people exactly what the technology is and what it can and can't do. And ICO is now a sort of subset phenomenon of that whole industry, but maybe there's not so much going on, and because ICOs are so decentralized and spread out, and there isn't really an ICO forum. I think some people are starting to do work on this, but is there a need for sort of more, I guess, cross-industry collaboration to educate regulators? I think, Jonathan, you maybe had a comment on that earlier on.
Absolutely. So one of the things I wanted to tie this to, and we had a quick discussion on this via email prior to the panel, is China. So China as a capital market system is also relatively nascent. They've only had capital markets there for a couple of decades. They've only had mutual funds there for less than 20 years. And so they're still learning. And because those dynamics there are very different, they operate in a very different way than European markets or Western markets, regulations have to evolve. They have to...
Oh.
No, I think we all cut out.
Yeah, hello?
Was it something I said?
We'll wait 1 second for... We've been banned.
We've been.
Oh, yeah, we got it.
Oh, there we go.
Censored.
So, yeah, as I was saying it, hopefully there's...
That was China shutting you
Yeah,
down.
okay. So Steve, I actually have to live in China, so that's why I didn't say that. But
But I don't.
Okay. But yes,
We'll scratch that from the record.
My point, I think, is made, which is when we're comparing crypto markets with more conventional capital markets, it's not as if it's a binary scale. You're mature, you're well regulated, there's information efficiency. It's on a scale, and U.S. markets, European markets are relatively mature. China's capital markets aren't. They're sort of on opposite ends of the scale there, or maybe China's kind of moving towards the middle now. And crypto markets are on the far other end of the scale. They're so new. Regulations aren't there yet. At least not the ones that have actually been fully dictated and formed. In terms of education, investor sophistication, service providers, it's all growing right now. We're going through a period of immense change and growing pains. And I think it's to be expected that there's going to be some bumps along the road.
Can I ask a question really quick?
Sure you can, Steve.
All right. So in China, I think, I might be wrong, but I think that peer-to-peer lending is actually a pretty good analog for where crypto is potentially headed. And based on being on the ground in China, what happened with peer-to-peer lending?
So I think that's a very apt analogy to make. A couple of years ago, the biggest financial services development was the advent of these peer-to-peer lenders, where you have people that need maybe 5,000 RMB, 10,000 RMB, which is a couple $1,000s, and they need this for starting a small business. And there's no way that they could walk into a bank. They don't necessarily have a credit score. They don't have any relationship with bankers to be able to borrow such a small amount. And up sprang all of these P2P lenders, which gave an opportunity for these lenders to borrow a little bit of cash and build a business, or buy that, car that they needed, to perhaps further their business as well. And the banks weren't doing it, so these platforms sprang up and also served as a investment target, for high net worth individuals, for institutions that wanted another asset class besides just equities, real estate, and dabbling a little bit in fixed income. This was new. This was interesting. This was an alternative asset class that seemed to be returning huge amounts of yield, right? 9, 10, 15, wow, 20%. How does that work?
I mean, that's very weak for crypto, though. Right? Like you get fired if you return 20%.
Yeah, no, you're right. It's might as well just go home for the day. But P2P lending really became popular because of that. And when the regulations came down, they came very swiftly and with an iron fist. And the reason for this is because P2P lenders very quickly became a vehicle of choice for Ponzi schemes, for fraud, for people that were just, they talked a good game. They said, look, I can take your 100 million RMB and give you a great yield, but guess what? They were telling the next guy the same thing, borrowing from Peter to pay Paul, and obviously that was a Ponzi scheme. So they very quickly wiped that all away. Now, the analogy to also crypto is also apt for another reason, because how that played out eventually is that P2P lending still exists in China. It's just that there no longer are tens of thousands of them that are all fraudulent. You have a couple of really big players. You have Credit Ease, right? You have Lufax, right? These are very well-established companies in China. And by the way, Red Pulse, we cover China. Sorry, little plug there. And so
they do a good job too.
Yeah, thank you.
So that's a little plug.
And so I think crypto space could also move in the same direction, where regulations, now that they see that there is a real viable use case for cryptocurrency, for fundraising through this channel, but done in a very regulated manner.
That was great. Thank you.
Oh, he agrees.
No, I mean, it makes perfect sense, though. And I mean, I think also in China, you have the issues of social harmony, right? So, if grandma's sitting outside trying to get her money back, the loss is going to get socialized somewhere. It just depends on whose balance sheet it goes to. And so I think, for a lot of economies, that's also true. I mean, you just can't have people showing up, taking money, taking off, and then leaving everyone else holding the bag. I mean, it's not sustainable.
I guess that raises the interesting question about, levels of risk. So you've got people who are experienced traders, who've been in finance, and maybe they're moving into cryptocurrencies, and that's one type of investor. And then you've got the ordinary person who sees the opportunity to suddenly get amazing returns, which they can't get from their pension. They can't even get from real estate, which has sort of become the new pension. So now they're thinking, oh, maybe I'll put my savings into cryptocurrencies or, buy tokens because I'm going to have this fantastic, life savings. There's going to be tripled, quadrupled, whatever. But those, risks are much more serious for someone who's an ordinary person. We talked about, someone's grandma, someone's great auntie puts their life savings into cryptocurrency. It's a much bigger risk and much sort of more scary than, say, for someone who's maybe a more experienced trader who, might be more akin to the idea of losing and making money rapidly in a day in the kind of high-stakes world of trading. So how do we sort of treat those two different types of investors? I mean, there's trading for kind of the more experienced person, and then the average person who's trying to suddenly get into this new thing that they really don't understand.
Right, so I think in BlockEx, that's what we're trying to do, try to help these average investors to basically see through all the hype and all the, as Steve put it, scam ICOs out there, right? So for us, we actually put together a highly sort of veteran team that could basically see through all the fake ICOs. So we go through, because for average investors, for people who doesn't understand blockchain or crypto, it's really hard for them to understand really how a project would and how they would evolve in the future. So for us, we actually work with various third parties such as KPMG and a few legal firms to actually help people to sort of weed out the bad and only left all the quality and good project I think will change the world. ICOs to be kept on our exchange and for people to actually easily invested them, even through fiat currencies. So I think it comes down to a lot of these exchanges helping the community or giving back to the community by helping average investors to weed out the bad. But for more sophisticated investors, they know this is a risk, and if they're willing to take the risk in more sort of high risk ICOs, then it's their choice.
What are the kind of warning signs that people should look for? And people say, look at the white paper, look at the token economics, look at the technical credentials of the team involved. But for a lot of people, they wouldn't really understand economics in general, let alone token economics.
You don't actually have to understand economics to buy ICOs. You just have to understand greater fool, that you think you're gonna pass it off to somebody who's maybe less discerning or less careful about risk than you. I think one of the really big red flags on an ICO is a massive list of advisors, because what they're doing is they're tending to target networks that have an affinity for each of those advisors, and so they're just casting their net really far and wide. I think another thing is when you look at the advisors list, look at how many ICOs that advisor is advising on. I know people that are advising on 20 ICOs. Do they never sleep? What in the hell kind of advice can you provide to 20 different, presumably complicated projects at one time? It's completely nuts. I think from an investments perspective, it makes sense to think about things in terms of asset allocation versus security selection. So when you're actually planning your finances and where you're going to invest, whether it's in equities, debt, rates, currencies, crypto, the big question you have to ask yourself is how much do you allocate to each sector? So how much is going to be in fixed income, how much is going to be in equities, how much is going to be in privates, whatever.
So essentially you're creating a more balanced portfolio where you only want to take a certain amount of risk with a certain amount of your money.
Yeah,
and crypto should be part of that balanced portfolio, let's say. Yeah,
so if you want to say that cryptos should be part of your portfolio, I think that makes sense. Should it be 5%, 10%, 2%, whatever, up to the individual investor. But I think it's kind of a fool's game to pretend that you're going to go in and select one ICO that's going to be a home run, another ICO that's going to be a home run. Honestly, I think for most people that wanted exposure to cryptocurrency, allocating percentages to mined coins, not some token that's an ERC20, but something that actually has its own blockchain, its own protocol, I think that makes sense. You shouldn't buy Monero though, because it's a scam. Yeah.
So is there something that's fundamentally different about cryptocurrency trading as opposed to trading in traditional assets? We talked a little bit about that at the beginning, but is it really just about managing the level of risk? Obviously this is a more speculative and risky environment than some others, but lots of markets are risky and speculative. So is there something kind of more special about crypto and tokens than any other kind of aspect of the marketplace?
I can take the token bit.
Okay.
I'm not qualified to talk about trading per se, so maybe you could pick it up. A huge asymmetry of information. That's the starting point, right? So unless you know how and where to get the information that is accurate, it's just a numbers game. So, what I observe is basically just massive spray and pray approach that seems to work for a lot of people just because the tide is rising. It dipped a little bit a few weeks ago, seems to be rising again. Mm-hmm. But yeah, it's incredibly, the information arbitrage is massive and scary. So when you ask the question, what should an individual investor look at? You can triangulate around some basic points like, yes, having an excessive advisory board, having advisors that lack credibility. Does the team have a meaningful vesting schedule of the tokens? the tokens get very obviously pumped, what's happening with the exchange discussions? What's happening with the statements that are coming out? How much of it is hype? How much of it is fake news? How much of it is just, outright lie? It's wild east. Yeah, absolutely.
Yeah, and I mean, it's an educated guess, but it's still a big part is guess more than educated.
So you have to place yourself in the correct flow of information. You have to be able to disguise signal from white noise. And this is the only skill that is important in specifically in token investing. 5% of the teams have the credibility and the technical acumen.
Right.
Yeah, everything else is a numbers game and information asymmetry.
Yeah, I just have a quick thought on that. Not so much on how to best assess which projects are good or bad, but I think to some extent there may be some bit of a self-fulfilling prophecy here, because there's no better way for a child to learn not to touch a hot stove than to touch the hot stove, right? And he gets the shock of his life or her life, and he says, I'm never going to touch that again, right? So a couple of times where they lose their shirt with a so-called, really compelling ICO, and they, nothing comes of it, they learn. And they come up with their own ways to better assess a project than to just toss money into something that obviously had a very large marketing budget to begin with. And I think that self-driven motivation to do better due diligence on the projects is going to go a long way.
So I think we've got two different markets that are being traded. There's the new issue market, which would be the ICO. And then there's like the existing or the seasoned market, which would be the stuff that's more liquid. If you look at like the top 10s on most exchanges. And so those are two different propositions, right? Like when you're looking at a hedge fund, you're going to have guys that do event-driven strategies, which is what I'd consider more like the ICO, the issuance, whatever. And then you're going to have people that actually do like liquid strategies, which would be trading Bitcoin, trading Ethereum, whatever. I'll stay away from the ICO stuff because I don't think there's a great way to trade it. For the more liquids, I mean, a couple things. Exchange availability is crucial. We've seen exchanges go down all the time. Exchange security is crucial. I have a friend who's a very large currency options trader in Hong Kong. He put a little bit of money into Bitfinex to try and trade Bitcoin. He woke up a year ago, he was down 38% for no good reason, and he's out. And he's a professional trader. Because he's like, this doesn't happen in a professional trading environment. You don't wake up and get haircut a third by your exchange, because it's nonsense. Like you'll go out of business if you keep doing that to people.
And we haven't even spoken about decentralized exchanges yet, but I could get you started on that one.
Yeah, you don't want to.
Yeah, I mean, obviously, the exchange security is a huge issue. I mean, that's been something that, we talk about, Bitcoin blockchains have been hacked, but clearly Bitcoin exchanges have been.
Yeah.
So anywhere you've got an entry point, whether it's a wallet hack or an exchange hack, you've got exposure to risk, and that's something that, maybe people, when they first get into this, are not always aware that, they may be exposed to that, and you can have big losses.
And I think that's a huge risk, like, for getting institutional adoption, because you actually can't walk into your investment committee and be like, oh yeah, like we lost a third of our money because I put it on this stupid exchange, and they either got hacked or it was an inside job or whatever. I mean, it's just, you're going to get fired, and people aren't going to take that risk.
So I think we're going to turn it over to questions. This one's a good one for questions, so I'm hoping we're going to get a lot of audience participation. Just looking around the room for some hands.
Oh, IOTA is also a scam.
Just to get the debate going.
Hi there.
It really
chap
is,
here
though.
with glasses.
Hello.
Just wait for the microphone, please.
They're going to give you a microphone.
I think I've got the microphone.
I think that was a question about...
It's me over here.
Okay. That was a question about if you're going to say that something's a scam, could you quantify what you mean by that?
Sure. I mean, the product that they're offering doesn't make any sense. The white paper has basic mathematical errors. I mean, that would be 2 real hallmarks. Is there someone talking? Are you still talking? I mean, and you look at the past behavior of the people involved in the project. Like, there's people that are out raising money that have done projects that have ripped people off within the last 18 months. I mean, there are people that have done projects where they can't keep from locking their wallet in the car. Like, it's nuts. Like, so I think you want to start out looking at the team, figure out if those are good people. Then you want to look at the tech, so that would be the technology behind it. Are they solving a real problem? Are they doing it in a good way? And then you want to look at the terms, and those are the terms of the offering. So for us, like, I can't put money into something where somebody's telling me, it's a donation, but once we get it on Bitfinex, it's going to moon. Like, that doesn't make any sense. So I think if you start with the team, look at the tech, and then look at the terms that you're being offered, you can pretty easily dial into if you were participating in a scam or not.
Hi.
Who has the mic? Wave at me.
Yeah, over here.
Okay.
I'm
Hello.
not that tall, but I am here.
I see you now. I see you now.
Yeah, hi. I count myself as an old school trader, and I haven't traded for about 10 years. Now, this whole crypto thing is just crazy for me. You know, seeing people get in that have never traded before, and they're times 10, times 100, etc., etc. So I'm very wary of Ponzi schemes and everything. So first of all, as a direct question, something like hash mining, as in the company, is it hash mining, I believe it's called? You know, is that a scam?
I think you mean the hash graph. Is that what we're talking about?
No. It's a cloud mining.
It's a cloud mining. So
cloud mining is always a scam. That's something
because it blows my mind.
That's something that you should know.
Right, okay. It's good having someone like you on the panel here because we can get a good, you know, we look back at the panel at the beginning of the day and they're saying it's $100,000.
If they could make money not
we're...
scamming you, they would just mine. Like, they
That's
would
what
just
I
do
believe.
it. Yeah. It's, all right, what markets did you trade, if I may ask?
I was on the futures market in London, so interest rates. So it's a real
rates
thing.
Futures. Okay, so that's like a real legit, like,
yes.
yeah, you have to know what you're doing.
You know where interest rates are going to be. You know if you'd be buying or selling.
You understand your contract. You have clearing. Yeah. Okay.
So this is blowing my mind. But I've got involved, but with a value of money that if this all blew up, it wouldn't hurt me. Okay. That's
the right way
to
do it.
Nice, sensible way.
Albeit, so what's the question?
Well, I was going to say, albeit 3 hours ago, I was going to steam into Bitcoin with even more because they were telling us it was going to be $100,000. My question is, you know,
remember, this panel doesn't constitute investment advice or legal advice.
No, of course not. Of course not.
Especially.
But I'm just saying. The idea of this, you know, where are we looking at here? You know, what are we saying is a scam, is not a scam? And, you know, and as people that are just getting involved in this, you know, how do we sort of gauge everything that's going on here? What's your advice on that? You're saying, I mean, Monero, was that a joke or is it a scam or, you know?
I think we shouldn't spend the whole panel discussing which projects people consider to be scams or not scams, but I think the question about how do we navigate the marketplace is interesting because a lot of the information is scattered, so you can get information from the person doing the token sale, you can get information maybe from some of these evolving data marketplaces and platforms that we've heard about today, but you know, it's very difficult to actually get all the information you need in one place. So how do people go about kind of making an informed decision with always an element of risk, but maybe feeling that they have gone in at least with a managed risk or some kind of informed state of mind?
So if only there was some platform out there that allowed a crowdsource mechanism for people to contribute their ideas, their analysis, and be voted upon it, you know, and sort of the wisdom of crowds, so to speak, and make that process much more efficient because those that are in the know, they're obviously at an advantage, and those that aren't, they're at a clear disadvantage. So I think it's a great idea for a project.
I mean, I think crowds don't actually do a great job of assessing risk in general, unless there's some economic incentive for them to do good work. So Absolutely. If your platform has that, maybe you're onto something. Okay. But for like you're a rates guy, like think about the most off-the-run rates market that you'd trade, and then dial that back by half, And then that's how far down on the league table for crypto that you should be thinking about investing. Because trying to pick winners out of ICOs is just, it's not, first of all, it's not worth it in general. But secondly, you're very unlikely to be successful over the long term. Maybe if you're, everyone's a bull market genius now, and everyone's making money, everyone's up 100x, but the worm turns. So I think for somebody getting into it, look at the more liquid, more established cryptos, try to understand how the exchanges that you're trading on operate, and then go from there.
Yeah, I actually have to agree with Steve right there, because interesting, I had a conversation with one of my friends before I came here. She's a doctor, so she works long hours. She doesn't really have time. She got loads of money on her hands. She was like, hey, Joe, you're in the cryptocurrency space. What should I do with my money? Should I invest some in crypto? Should I do whatever? Like, should I just go to a bank and ask them to invest for me? I was like, well, for you, I would. I think also Jonathan actually had a really good point, because if you never tried it, you've never invested in crypto, you'll never know how it works. So I said, yeah, you can put a little bit of your spare money into crypto or into ICOs, have a little feel, and I can tell you where you can find all the information. So I think you get to help people to sort of understand a little bit more about this space, and they can basically invest in their own decision. But yeah, I wouldn't advise someone to say, yeah, put all of your earnings, all of your savings into an ICO. That is definitely going to make you 100 times more. That's just nonsense, which is true. So yeah, I think for average people, average investors, it's important for them to learn how to get into the crypto world by trading a bit. And also Steve said, like, Bitcoin, Ethereum, these highly liquidated crypto are probably your first choice.
Not IOTA though. I think it's also like it's probably valuable to think about how much active trading in traditional financial assets actually happens. I mean, everyone has a 401k or a pension or whatever, and I don't think that most people that are putting money there sit around and try to think about, well, should I be buying this? Should I be buying this? Should I be buying this?
But I mean, you have independent financial advisors, so your independent financial advisor would tell you, how risky of a person do you think you are on a scale of 1 to 10? Do you think you want to take a lot of risk with your money, or do you want to take a bit of risk with some of your money? And you get asked these kind of questions. So, is there a role for kind of independent financial advisors for the crypto space, to sort of teach people to navigate the field? I mean, that would be an interesting thing.
You might be surprised to hear this, but IFAs are also a scam.
I'm not surprised to hear it from you.
But I mean, I'm not sure, but I think what I was talking about earlier, where it's asset allocation versus security selection, I think it still applies. Like for your friend, does she have 5% that she could throw into, a little basket of like some cryptos? Sure, it makes sense. She's a doctor. She's going to keep making money, presumably. So if she gets blown out, it's not lights out. But I don't think that this is where I get back to crypto exceptionalism. Like, it's not that much different in terms of what people should be doing. Like, coming from a real estate background, my least favorite thing is real estate crowdfunding. I like it less than ICOs.
That's saying
and
something.
it's because most people should have exposure to real estate through a broad-based index of publicly issued real estate securities. And I think maybe at some point, crypto could get there, and that would be great for everybody, because when you have broad-based indexes, it means you have a lot of professional money coming in, and it means that you're actually doing something, and you're actually like creating some value, versus where I see at least ICOs at this point, it's a cash grab.
I mean, if we sort of come full circle, because one of the origins of Bitcoin was people's lack of trust in the existing financial system, and the reason people liked it was because they saw it somehow got away from some of the lack of transparency that there was in existing financial markets. So now we've come back to this kind of ICO world where maybe, again, we're sort of somehow lacking transparency in the system, and that actually, have we kind of gone back to the beginning again? I mean, just for all of the panel, but you might want to answer on that, and then we'll ask the others.
I think if you look at the correlation between account openings, searches for what is Bitcoin, and Bitcoin price, I think the clear indication is that most of the people coming into Bitcoin now just like money. Like they don't have a real grasp of the ethos. They don't understand why a blockchain actually works and like what makes it a system where I can send money to somebody who I don't know and I can reliably, prove that that transaction has happened beyond a shadow of a doubt.
They're not motivated by sort of crypto-anarchist tendencies.
Most people aren't aware of it.
Excuse me?
Most people that are piling into crypto now, they're not aware of the philosophical whatever underpinnings or the history and so on and so forth. But they're just chasing.
I mean, that's the sort of downside of going mainstream, I guess. Once people know about it, they're not true believers. They don't need to know the background, or they think they don't need to know the background. They're just in it purely
right now it's all
yield.
about the outsized returns and the hype, and these things will.
Is that necessarily a bad thing, though? Just
No,
because
no.
they're not part of the original crowd, they haven't been holding Bitcoin since 2000, whatever, and.
No, I mean, I don't think it's a problem at all. It's kind of like,
an
people who've been into a band for years and then they suddenly get annoyed that suddenly everybody else likes their band, right? I mean,
Yeah, exactly. So there's
you
a
don't have a
little bit of that
monopoly on
going
liking
on,
a
right?
band,
All my
you don't have a
favorite bands
monopoly
now
on
suck because they're famous. But I think it's not, I agree with you that like the point is not for people to adopt some kind of, worldview or whatever, but I also think that people that think cryptocurrency is meant to pay for a coffee or be highly transactional might not exactly understand why it doesn't work. If life is about trade-offs, economics is constraints under choice. And so if you have no constraints or you think you have no constraints, you don't make any choices. And when you don't make any choices, you end up with something that promises everything, delivers nothing, and leaves everybody really disappointed.
It's a trade-off, though, isn't it? So is it important for new adopters to fully understand the technology? Because the other side of that is higher adoption rate, higher scale, of usage of that particular technology. And not everyone understands how a credit card processing system works, right? But everyone uses it.
Right, but no one's investing money in a credit card processing system. I mean, you could buy stock in Visa, MasterCard, whatever, but like in general, using your credit card isn't, and that's actually a great scam that people have been doing, are these crypto debit cards, which is where it's just like some bullshit affinity marketing, where they find people that love cryptocurrency and they have this crazy idea that they want to be able to spend it, and they don't realize that, no, it's not actually going into your wallet and like figuring out how much you have left. It's literally the company has like a processing bank or a fronting bank, and they just manage to convert your crypto into whatever your local currency is at an exceptionally bad rate, and that's how they make money. I mean, it's,
I think we have time for a couple more questions at the front here.
Decentralized exchanges. Good, scam, bad?
I think we know what Steve's going to say.
yeah. Does anyone want to go first? I'm happy to wait. I mean, I think
You'll have an entertaining answer. Can we get everyone with the other three first, and
yeah,
just end it with a bang?
Do that.
I mean, one of the issues with decentralized exchanges is obviously that they're completely unregulated, and people don't even know how they could regulate them because they don't know which jurisdiction they relate to. So you're taking a risk maybe on top of a risk, but then some traders may see an advantage in using decentralized exchanges. So maybe you can outline if people see an advantage to a decentralized exchange, what that would be versus a centralized one.
Yeah, I think the emphasis is on some traders. That's pretty much the answer. So.
That's a nice snappy answer. Since we only have 5 minutes left.
Oh wait, should I do?
Jonathan?
For decentralized exchanges? You want to do? Go ahead. No, go ahead. You're building an exchange, right? Yeah, so do it. Oh, it's a CLOB? CLOB? Okay. No, I think people that say decentralized exchange, they either don't know what decentralized means or they don't know what an exchange does. Because functioning modern exchanges work by centralizing orders. And there's so many good mechanisms, netting, clearing, membership, that you can run on a centralized exchange that lead to better price discovery, more transactions, or at least transactions that people are more willing to enter into. Most of the projects out there doing a decentralized exchange, they have a couple fatal flaws. One, they don't have live pricing. So I can't go out and hit a bid on a decentralized exchange. I actually have to discover that bid and then negotiate with the seller to do it. CLOB, central limit order book exchanges, it's live pricing. If I publish a price, I have to execute. Another problem that I think a lot of them have is that they somehow think that by bringing more people into a system, you create this magical thing called liquidity. Liquidity only happens when you have people taking risk. You have to have capital at risk to create liquidity. You can't have, there's one where they say, oh, we have these oracles that publish prices. What the hell is an oracle? Like, if you're not trading, I don't care about your price. I used to trade OTC markets, so credit derivatives. I mean, it's very OTC market. Not anymore. It's moved towards a centralized exchange. And in that, like, the way that I was held accountable for my pricing is that if I fade people, I just don't see any more pricing. And when you're doing something where it's decentralized, anonymized, whatever, I don't have any track record on what pricing you're publishing. And so there's tons of incentives, and I would do it. Like, if a decentralized exchange really opens up, like, I'm gonna go in and just try to murder people, because, like, there's no accountability mechanism. And, like, so why wouldn't I do that? So I think they're a really bad idea. I think they're good for raising money, but I don't think anyone has actually come up with an implementation that creates a market that a reasonable person would want to trade on.
Does anybody on the panel disagree with that? Yeah. Okay. Time for one last question. Do you have any more? Chap in the middle there.
Thank you. It's been very interesting so far. I'm Michael. So sometime in the past, I thought that cryptocurrencies will be used for people to buy some goods or pay for services. But today, it's been all about ICOs, fundraising, daily trading. So I'm just wondering, will there be some point in the future where cryptocurrencies will be used for buying something, or do you see it not possible at all?
So yeah, I mean, that, you know, when I first got involved in Bitcoin, people sort of talked about Bitcoin as, you know, this world currency, or something that, you know, people would use to buy goods, as you say, and buy goods and services. But that has really shifted now to Bitcoin being seen as a store of value, I think, rather than as a currency that's used in that way. But I'll let the panel maybe give a final wrap up, each of you, on that, and maybe also one piece of advice. If you're thinking of investing in an ICO, what's your top piece of advice?
Not to invest in ICO.
Not to invest in an ICO. That's a short answer.
It's good, though. It's good advice.
But sorry, to address your point, I think Naval Ravikant, 2 or 3 weeks ago on his Twitter feed, said something along the lines of people that get crypto don't want to use it for payments, for a whole variety of reasons. And people ultimately right now it's we talk about mass crypto adoption, but right now transacting on a daily basis in crypto is simply a very silly thing to want to do. It's just expensive. It's a constant ripple. Why would you be doing this? Right? So that's something for the future, if at all. I mean, if anything, all the work that's being done right now, let's say with Bank of England, you know, around digital sterling and so on and so forth, that's probably closer to using digital currency, because that's in line with the cash being phased out, which has been a long-standing program of the World Bank and the IMF. But I mean, my personal view is anybody that gets crypto shouldn't want to have to transact in it. It's too expensive.
Jonathan?
Quick thought, I do think that you can buy things, and you should be able to buy things with crypto. Fair points, I think, from Anastasia.
Like a Lamborghini or, you know, Maserati or something, depending on the price.
I mean, exactly, I wasn't going to go there, but, you know, you can buy research with it, you know, in our case, and it's something that, you know, not to pitch my own book too much, right? But okay, I'll answer your other question then. I think people are getting tired of me. So the question as to whether you should invest into ICOs, my personal view is if you know them personally, this is sort of my benchmark. If I know them as an individual, as a friend, or maybe through a friend of a friend.
Yeah, you know where they live.
Yeah, I know where they live. I can find them. And
You're the godfather to their children.
So much for decentralization.
Yeah, so it's if you don't know these people, and especially if it's so early on in their progress as a business, it's another case if it's an established business. They've been operating for a while, and there's a bit of a trend taking place now where established businesses are looking at ICOs. That's maybe a different story. But for those very, very early stage startups that are now doing an ICO, be careful. You really have to get to know the team.
Yeah, quickly just touch on Jonathan's topic because quite interestingly, just before I came as well, I think Naga Exchange are here today as well, and they actually went through an IPO. They're listed on the German Stock Exchange before they started ICO. So I asked them, why did you want to do that? You already have enough funding. You already have, all the money you need to operate. Why do you want to do an ICO? And they're like, well, because ICO gave us access to people they've never met before, and they can build up a community that in turns will want to use their platform and product. So I think for a lot of these companies or legitimate companies doing ICOs, sometimes it's not about money, sometimes it's not about funding, sometimes it's about reaching a different audience and getting users, to use the platform. So I think that's another aspect of, company doing ICOs.
You said Naga, right? So they're like on the Alternatives Börse in Germany, right?
Yep.
So it's not the main board.
No, I think it's the main stock exchange.
No, they're on the alternatives, I guarantee you.
Oh, they are.
And they're also under investigation.
It's a secondary exchange.
It's like London AIM, right?
Exactly.
And they're under investigation for price manipulation in their IPO. So I mean, really, if that's a legit company, you need to go back to work. Yeah. I think for most crypto, when it's actually going to be something that's worth doing, it's when nobody actually really realizes it, that it's what's going on in the background. So it becomes an infrastructure layer for enabling things that you want to do every day. But if you think about it as some sort of separate special technology, nobody really thinks about what kind of database your health insurer is using. I mean,
no one talks about the kind of underlying workings of a web page, for example. It's a
exactly.
similar analogy. Yeah. We just use the internet, and we.
Though this is an excellent point that back when the web was coming online, it was kind of like a little bit of black magic, and people were like, "Oh, this is crazy," and now it's just part of your life. So I think if crypto is going to get wide adoption and actually be a useful technology versus a financial product or something for raising money, it will end up just being something that works in the background and nobody worries about the implementation. And it just kind of solves the problem that it's meant to solve. And the companies that do that are going to make a ton of money. But it's pretty much impossible to figure out who they are right now.
I think that's a great note to end on. I think blockchain has so many possibilities, but in some ways, our in-depth conversation that we've had is very interesting for us. We're all people that are somehow involved in the space, but for most people, they just want to know what can blockchain do for me or what can cryptocurrencies do for me as an end use case, and they don't actually care at all about how it works. So maybe someday we'll get to the point where, a blockchain conference will be akin to having an HTML World Conference, so no one would probably hold that conference now, so maybe we'll be having a conference about the next iteration of this technology. I think we've gone a little bit over time because it's such a great subject, but I'd just like to thank all of my panel for being such good sports and getting us going with a really fiery debate for the last panel of the day. So thanks to Steve and Joseph and Jonathan and Anna.
Thank you.